Today, we're going to go over the most profitable indicator that you can use as a trader. So without further ado, let's get straight into the video and we're going to talk about why it is the most profitable indicator. So before we dive into each example of what we're going to go over for today, this indicator is the most profitable indicator because it gives you an edge in every single stage of trading. It's going to be with you from when you're looking for a trade all the way till you exit a trade. It is going to have very specific use cases for each stage of your trading process. And it's going to give you an edge in each one of those stages. So the indicator we're talking about today is the MACD. Now, I've talked about the MACD in many other videos, but today we're going to go over each of the stages that the MACD can be useful in and why it's going to be very profitable and very useful to add to your indicator list and to use as a trader no matter what strategy you're using. So without further ado, we're going to get into the first section, which is when you're looking for a trade, when you're searching for a trade, why it's going to give you an edge and why it's going to be useful. So let's get right into that. Okay, so we're going to dive into the first section here, and this is very exciting because the MACD, like I said, it works for every single strategy. No matter what strategy you're using, you're going to utilize the MACD in some sort of way. So whether you're using it from the very beginning to the very end, or maybe you're only using it for a certain section, doesn't matter. Point is, right now we're going to cover why it's useful when you're looking for a trade. So in any strategy, you're always going to have some sort of reason to look for a directional bias. You know, for your trading style, it may not necessarily be an important factor, but for most strategies, an important factor is having a directional bias, you know, understanding where price is going to go in the short term, in the midterm, in the long term, whatever it may be. But you need to have an idea where price will go in the future. And, you know, nobody has a crystal ball. You can't predict exactly where it will go. But if you know there's certain momentum in a certain direction, it's more probable to take trades in that direction. Now, I know I'm rambling a little bit here, so we're going to get into exactly what we're talking about. So let's get into that right now. So one of the use cases of the MACD is having an understanding of where momentum is going at the moment. So a simple and easy trick for when you're looking for where momentum is and how strong it is to look for 3 candles going the opposite direction. And what do I mean by that? Well, so let's say you have price moving down. And as you can see on the MACD, you have candles moving down. Well, when do we know when price is going to reverse? When do you know we're going to have momentum flip to the other direction? Well, typically, a rule of thumb is to look for when 3 candles are going the opposite direction. So if this is a downward movement and we're having these candles, when you want to see a reversal, you want to see 3 candles in a row, 3 candles in a row of the opposite direction. So we have 1 here, 2 there, and 3 there. So typically when you have those 3 candles in a row, it signals that the momentum is starting to flip. And as you can see, from this point onward, we have some momentum back up to the upside. Now, this is good because you can look for this on the higher time frames and then you can drop to the lower time frames, for example, like the 1 hour. And this is where you can be looking for your trade. So this is where that point happened. So from here on, we can start to look for entries. And following our entry, we will have momentum on our side. So no matter what trade we're taking, we will have momentum on our side, which is very valuable no matter what strategy you're using. But that's not all. I'm going to continue to show you a couple more examples so you really get a feel for what I'm talking about. So we can continue on from where we left off. So now we have price moving up, and then we're going to look for 3 candles in the other direction. As you can see right here, we have 1, 2, and 3 going to the down direction. So from here on, this is where we can start looking for trades to go the opposite direction. So like I said, you can drop to the 1 hour, and then when you look for whatever your entry signal might be, for me, for example, we could look for a nice engulfing candle. So from here on, we're going to look for an engulfing candle. Let's say we have this bearish candle right here engulf the previous bullish candle that was right here. As you can see, it engulfs it. That could be your entry. And from here on, you have momentum in your favor. So as you can see, you're going to get a big risk reward off of that. Now, yes, I know I'm sitting here looking at a perfectly cherry-picked trade, and this is not something I would normally do. I don't typically trade off of just engulfing candles. But for example, in my strategy that I use, I like to look for breaks of higher lows. So what I would do is mark out on the 4 hour. And this part is going to be very interesting if you like the simple Forex strategy. What you do is you mark out that third candle, for example here, and then you'll drop to the 1 hour, and then you divide the 1 hour by 4 once again. So I'm on the 4 hour, I divide it by 4. That's the 1 hour, I divide that by 4. And this is where we're going to look for our price action. This is where we're going to look for our strategy. And my strategy consists of looking for a higher low to get broken. So after this point here, we had a higher low that was formed here, and we're looking for a higher low to get broken. We had a higher low. We had a higher low get broken officially here. This is where the true break was. And then entering off that, you get a nice, simple risk to reward and setting your stop loss nice and above. This is how it would work with the simple Forex strategy, but I know not everyone trades that. So I'm just showing as an example that this is good if you want to have momentum on your side, no matter what strategy you're using. The MACD is so useful, and this will add to your profitability. If you can't see it here, I don't know what else to tell you. Go ahead and try it for yourself. And if you're looking to try it for yourself, go ahead and use my link in the description and sign up with Fintura. Fintura is a broker that you can use to trade. Fintura is easy to use, fast, efficient, and you can be signed up and trading with them within the next 10 minutes if you wanted to. So if you're interested in looking to start getting traded, or maybe you have a broker and you don't like using that broker, go ahead and sign up with Fintura. And without further ado, let's get back into the video so we can show you some more use cases of the MACD. So that was just how to use it when you're in the searching stage. This is when you're searching for trades and maybe you find something you like and you want to look for a directional bias. That is very helpful, but there is so much more to cover and so many useful ways to use the MACD. So let's jump into the next section. You found your trade, you're looking to enter, you need something else. What's the next thing you need, and what indicator can we use? Well, like I said before, we're going to use the MACD from the start to the finish. So this next section is for confirmations. So now when you're looking for a confirmation for your trade, the best thing you can do is use divergence. Covered divergence before, but I'm going to cover it again because you can never have too much divergence. It's a great indication of the truth of what price will do, and this is how it works in a simple example. So in this example here, we have price moving up, and you know price is moving up because the highs are getting higher. So here's a high going to a high. And as you can see, next high is higher than the previous one. However, when you look on the MACD, it shows the opposite. Here's a high, but the next high after is actually lower than the one before. So this tells us what's actually going on is that price is losing momentum. So you can almost see this as the final push. It's like it's giving everything it's got, but there's just not enough momentum to keep going. So typically after that, we have the crash of the opposite direction. And as you can see, it continues to make one last high and then has a big crash afterwards. Typically, that's how it goes when you have divergence. It's not like that every single time, but divergence is a good tool to use as a confirmation. Now, you can't just trade off of divergence alone, but paired with every other thing that you use for your strategy, divergence can help you a lot. Now, we're going to move on to the final section of the video, and this is going to be while you're in the trade. So this is a confirmation for you to get in the trade, but how can the MACD actually help you while you're in a trade? We're going to cover that in just a second. So finally, when you're in your trade, the best thing you can do, and you can go ahead and look at your trades and apply this to your own as well. The best thing you can do to get the maximum amount out of each and every single trade is whatever time frame you're on, jump back to the time frame that you used originally for when you were looking for the trade, when you're researching, when you were searching for a trade. What did we use? We were on the 4 hour. And how did we get in this trade in the first place? What we did is we looked for the 3 candles in the opposite direction. As you can see, 1, 2, 3. And then we jumped down a lower time frame, looked for a trade. I think we entered, was it on the 15 minute? Yes, we entered on the 15 minute. We got a break here. We enter. But how do we make sure we get the most out of this trade? Because when you're just looking at the trade, you might think, oh man, this might go back up. How do we know it's going to keep going? So you're going to go back to the original time frame, like the 4 hour. And the same thing applies here. If we're in a sell, we want to see 3 candles going the opposite direction into the upwards direction for us to be like, okay, we should probably exit our trade. So we can play this out. And as you can see, we have 3 going down. This is good. There's 1 going down, but it's not in a row, so we can keep holding. Now we're up, as you can see, to a 2.48 risk to reward ratio. We're still good. We're still in the trade. We can still hold. And now we get one candle to the opposite direction. See, can we keep going? We have two candles to the opposite direction. So right about now, as you're in the trade, you want to start contemplating if it's time to exit. As soon as we get 3, that should be enough for us to be like, okay, we should exit our trade. So we're going to go ahead and exit our trade right there for a nice 2.47. And as you can see, that's way better than before. If you only had that 1-to-1, you can get so much more out of your trade by watching the momentum of the MACD, like I said. So as you can see, now we have 3 up, we exit the trade. And like I said, when we have 3 going in the other direction, typically the momentum has switched. So as you can see, the MACD is a very useful indicator that honestly will change your trading game. If you haven't used an MACD, I would highly recommend starting to use it. Help you a lot. And yeah, like I said, if you're looking for a broker to use, go ahead and sign up with Fintura. I'll have a link in my description down below. Thanks for watching.